Hello and welcome. You're watching Market Fatafat on ET now. Now, this is a show where we're going to take you through all the stocks that are buzzing in today's trade on the back of technicals as well as fundamentals. But before we do that, Shrishti, run us through what the market is doing, and it's not looking pretty good because now we're even below the 24,400 mark on the Nifty.
Well, certainly, Snehi, no such substantial recovery from the day's lowest point for Nifty 50, but can't say the same for Nifty Bank, which is gaining around 300 points. And the good part is that it's sustaining those gains as of now, but it's the broader markets that are not that supportive in today's trading session because the kind of momentum that we have seen yesterday has fizzled out a bit, and it seems like that the number of shares that are declining on NSE as well as BSE are overpowering the number of advances. But if we talk about a lot of stock specific action that what we are witnessing, first up, the cement pack is moving up strong. Just a while back we did had the numbers from ACC. The numbers were not that great, but if you look at some of the other pairs from the likes of Ultratech Cement, Grasim, they are the top gainers in Nifty 50 today. A couple of these PSU counters, be it like from SBI, BEL, they are also gaining, and even Coal India is seeing an upsurge after so many days of decline for a lot of these counters in the PSU pack. But it's the HDFC Bank as well which is lending some support to the banking index. But on the flip side, it's HUL, SBI Life, Nestle, all on the back of some news flow that are seeing decline in today's trading session. But apart from that, stocks like REC and PFC too are having great day in today's trading session. So let's wait and watch, Snehi, because what we have witnessed in the first half doesn't replicate the same way in the second half for the past couple of days. So can't say the same that where are we headed in the second half then.
Well, absolutely. Shrishti, it always happens. We open a certain way and then we close completely averse to what the GIFT Nifty has implied in the morning. But on that note, let's kickstart the show and talk about all the big buzzers, gainers, losers in today's trade. On the technicals today, we're being joined by Ashish Kyal, founder and CEO at Wave Strategy Advisors. And on the research front, we have Gaurav joining us. Good afternoon, gentlemen. Thanks so much for joining us on the show. I'm going to start talking about the big buzzer in today's trade, and even amid a market as somber as this, you have one stock that's doing very well for itself, and that is Piramal Pharma. Now, when you take a look at the numbers coming in, this is obviously on the back of a very stellar set of Q2 numbers coming in. Consolidated revenue from operations has come in at 2,242 crores versus 1,911 crores, which is up 17% on a year-on-year basis. Now, it's the net profit that has done wonders this time because it was at 5 crores last year and it's come to 23 crores. It's almost up 5 times on a year-on-year basis. Now, reported EBITDA also has seen a hike of 28% year-on-year. Margins have also expanded smartly 18% compared to 16% on a year-on-year basis. Now, the company's CDMO business saw a boost due to the rising demand for innovation projects, while the company also announced an 80 million expansion plan at its Lexington facility, expected to be completed by FY27. The investment is aimed at capitalizing on the increasing demand for sterile fill finish capabilities, and even in the consumer healthcare division, the company reported steady volume growth in the inhalation anesthesia products across the US and emerging markets. In its India consumer healthcare business, Piramal Pharma's power brands and e-commerce sales continue to demonstrate growth. So overall, very good set of numbers coming in. Operationally also the company has done very well. And on the back of that, that stock was higher by 17% as we speak.
Alright then, moving on to the next stock that is not seeing some great gains in today's trading session, and that is TVS Motors, because just yesterday we had the numbers coming in and there was a marginal miss when it comes to the top line and the bottom line of the company, but it's the commentary as well which is not giving that cheer to the market participants. If we talk about their domestic outlook, so the management does expect 7 to 8% growth in the Q3, and that could be supported by a better demand on the rural side. The Navratri sales, the festive season sales, as they say, has gone up by 10 to 11%, and in the Q3 the volumes have been up just 4% so far. The management does expect some more pickup in the times of the festivity that is around. Other than that, the export has been doing pretty well for them. The company also said that in some time from now they will be launching a new electric two-wheeler. So all in all, there was nothing exciting coming in from the TVS Motors con call, because like we have been highlighting, that is the festive sales that is not giving that much of a push to the automakers at this price point, and it's TVS Motors numbers as well reflecting the same.
Okay, so TVS Motors, a little slightly negative in today's trade, but Ashish, you've picked out Motilal Oswal Financial Services for us on the charts. Now, this is a stock where we don't talk about very frequently on this show. Tell us what you are spotting, because even if I just pull the year-to-date charts, the stock has tripled just on a year-to-date basis. Do you think this kind of rally is also sustainable going ahead, or now do you pencil in some slowdown coming in for this stock, at least on the charts?
See, if you look at Motilal Oswal, the stock has done very well over the past 1 year. Even if you look at the 6 month chart, it has been outperforming. And the overall trend for the stock remains to be bullish. Any dip from here can be used as a buying opportunity. We can expect the stock to reach towards the level of 1100 over short term and possibly 1300 over next few months of time. So the overall tone remains positive. And on the downside, one can maintain a support for the stock around 850 levels, which is also close to the 20 days moving average. So I think the volumes are picking up along with the uptick, and the pattern is bullish. So expecting a positive breakout soon.
All right, that's about Motilal Oswal, but let's also talk about Paytm then. And Gaurav, take us through what's the latest news flow out here.
Well, yes, there are a lot of positive news flows which are coming up for Paytm, and the first, when we talk about Paytm got NCPI's approval to onboard new UPI customers. Other than that, when we look at the numbers also in Q2, Paytm came up with a strong set of numbers. Those were higher than what the street was expecting. And now what is happening is now Citi is now being a little bullish on Paytm. What they have done is that they have upgraded the rating to buy from what it was at sell, and they have also hiked the target price to 900 rupees versus what it was at 440 rupees. What they're saying is that when we look at the company, regulatory points are checked right now. When we talk about the cost ratios, they are also at a very good point, and now growth is going to take a pilot sheet. What they're saying is that the regulatory risk is largely behind us. The announcement to plan to offer default losses guarantees is also going to complement. And at the same time, when we talk about the RBI guidelines and its lending partners to merchant businesses, Paytm's all the backgrounds are likely to grow for Paytm, and as a result, they are being a little bit bullish on Paytm. When we talk about the stock performance also, it is up 3.5%. So definitely watching out on this counter on the back of the bullish note coming up from Citi.
Okay, brokerage is giving Paytm a thumbs up, but on that note, we'll step into a very short break on this edition of Market Fatafat. More stocks on the other side when we return. You stay tuned.
Welcome back to Market Fatafat, where we highlight all the buzzers in trade right now, and we do have Ashish with us. So Ashish, your next stock that we understand is Hindustan Zinc in the metal pack. Select counters are definitely shining bright today. So what exactly are you spotting on Hindustan Zinc?
See, if you look at Hindustan Zinc, it has been some time that the stock was consolidating in a very broad range, and it is now bucking the trend, giving a positive breakout. So there is a positive moving average crossover as well. So the overall tone and the volumes are picking up. So the overall tone for the stocks looks to be bullish. We can expect it to reach towards the level of around 580 on the upside. On the downside, one can maintain a stop loss for the stock at around 510 levels.
Those are the levels that Ashish is spotting for Hindustan Zinc. But let's talk about a set of stocks, one out of which is doing very well for itself and the other one is tanking away in today's trade. Now I'm talking about Sona BLW as well as Escorts. Now if we pull up the charts of both of these, Sona BLW is outperforming the market today by leaps and bounds, but Escorts is highly under pressure, and there you have it. Sona BLW up 15%. Escorts, a slight bit of a recovery coming in from the day's lowest point, but nonetheless almost 6.5% lower is where that stock is. Now Sona BLW Precision Forgings has approved the acquisition of Escort Kubota's railway equipment business. Now the cost of this acquisition of the railway equipment division, which we'll call as RED, this business is 1600 crore rupees. Escort Kubota's railway division has been one of the most extensive product portfolios amongst railway component suppliers in India, and RED has reported revenue of nearly 950 crore rupees and EBIT of nearly 179 crores for the FY24. The proposed acquisition of RED is expected to be earnings accretive for Sona Comstar right from the first year and offers significant growth opportunities according to the company's regulatory filing. Also, what we are hearing is that this deal is not very fairly valued, or rather largely undervalued when it comes to Escort Kubota's railway business, and on the back of that, Escorts Kubota, that stock is down, but because this is going to be highly margin accretive for Sona Comstar right from the beginning, that stock is doing pretty well. Almost 15% higher is where the stock is.
Well, certainly, very divergent moves coming in on the back of the deal that has been announced. But moving on, and Ashish, the next stock that you have got for us is GMDC. Tell us what exactly are you looking when it comes to GMDC then?
See, we can clearly see this stock has formed an important low around the 330 levels, managed to bounce back on the upside. Looks like a positive reversal. So this is a high risk trade, but there is a very good risk reward setup that we can see on the stock. If it happens to form a triple bottom pattern and give a breakout, it's going to give a very strong returns on the upside. So we are expecting a move towards the level of around 420. As long as the support, which is around 340, remains intact. So the risk reward is very appealing for this stock for a bullish trend.
Those are the levels that you should watch out for when it comes to GMDC then. But moving on, let's shift focus to KPIT, what this stock is doing, because the company did come out with the earnings, and post that we do have the brokerage notes also coming in, wherein first up JP Morgan has continued its overweight stance, but they have slashed the target price now to 1900 rupees. The company did cut its FY25 constant currency revenue growth to a lower end. Overall guidance has been maintained at 18 to 22%, and the cut led by the delays in the ramp up, delays in the deal closure, and offshoring of the deals. Now they believe that this will be likely result in a softer second half for the company, and the weak exit rate that impacts the FY26 growth rate as well. And they did expect that the stock will react negatively on the kind of numbers as well as the guidance that has been given. And indeed, yes, the stock is down about 14% in trade right now.
Okay, so that's on KPIT Tech, but we also interacted with the management of the company earlier, where they're saying that the second half is expected to be more turbulent for KPIT Technologies. This is according to Sachin Tikekar, the president and joint MD at the company. Let's go across and listen into the word coming from him about the roadmap going ahead and also the outlook for the company and any management that has actually led to the stock reacting so negatively in today's trade.
We have delivered the first half of the year has been pretty good, well in line with our expectations, and we knew that the second half was going to be slightly there was going to be a little bit of turbulence. What is actually happening is many of the European OEMs, specifically the ones in Germany and France, they are trying to figure out what this means to them from the long-term perspective, right? Which markets they want to play in, how do they remain competitive, hence which kinds of programs they pick and which kind of programs they don't pick. The good thing for KPIT is we are part of all of those conversations. These spends cannot be postponed any further. I think, there is tremendous pressure and, programs need to get started in their new avatar, and there has to be consolidation. And those are the conversations that we are having. Now, when you have long-term, meaningful, big conversations, they take a little bit longer than short-term conversations. So we do believe that it's a question of 1 or 2 quarters and not anything beyond that, because beyond that, I don't think many OEMs can afford to push these programs out.
All right, so that was the management of KPIT Tech. But moving on to another large cap stock, and that is L&T. And Ashish, what I'm looking at is the stock is still down in today's trading session, but kind of holding itself around that 3,400 levels. How are you looking at L&T, and do you believe that it could be a breakout or a breakdown candidate?
See, if you look at L&T, I think it has managed to break below 3,500. It's sustaining just about 3,400. So looks like it's going to break down because there was multiple support around 3,450, 3,480 levels, and the stock is now managing to trade below that. So I'm not too optimistic about L&T. It was consolidating for quite a long time and now giving a breakdown. So overall outlook looks to be bearish, and we can expect the stock to move towards the level of 3,250 or 3,200 levels, which is the low which we formed on 4th of June on the election day. So that's the target for L&T on the downside. On the upside, maintain a stop loss of 3,560 levels.
Okay, Ashish, that's your view on L&T, but also take us through what you're spotting on the charts coming for Coforge. The stock is holding on to gains of 2.5% intraday, but tell us what's the outlook going ahead.
See, the overall IT space, midcap IT has been outperforming, and we can clearly see that Coforge has shown a very strong returns over the past 1 year. And even today, it is at 52-week high. The overall outlook is bullish. We can expect the stock to reach towards the level of 8,200 and possibly 8,500 as well on the upside. On the downside, one can maintain a stop loss for the stock around 7,400 levels.
All right, that's about Coforge then. But with this, would like to thank you so much, Ashish, for taking the time out and joining us and highlighting all the buzzers in trade right now. But with this, it's once again time to slip into a very short break. Viewers, don't go anywhere. We'll be right back.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.